Joshua Oigara, CEO of Kenya Commercial, is it Group now?
Yes.
Yes.
Thank you.
Do we say KC Group or?
KCB Group.
KCB Group. Yeah, just in case anyone didn't realize that.
Correct.
The holding company went through at the end of last year.
Correct.
Right? Congratulations on that.
Thank you.
Joshua, very impressed with the results. I'm going to come into those in a minute. But I thought, we had so much happening last year.
Correct.
You've just mentioned we had two banks go into, is it receivership administration?
Yeah.
Dubai
they are
Bank.
put under statutory management.
Statutory management, Imperial Bank and Dubai Bank.
Correct.
We had tremendous volatility in Q3, Q4 in interest rates. T-bills got as high as 23%. Of course, in the neighborhood, we had these challenges in Burundi and in South Sudan. When you're across the board. How would you characterize last year then from a macro point of view?
Well, let me say, Alikan, that is last year we saw more of a difficult environment, especially if you look at 2013 and 2014. Last year, obviously, the area we have always been in this part of the region, yes. I call it is a nerve center. It's actually, my word as well as been is an epicenter.
Yes.
Because then you can be able to go into different opportunities in the market and get surprises or get a way to leverage your businesses to good growth. But what we have seen in the economy last year, Kenya, despite all these aspects, you're right, that the industry knows that a very good sign. Getting two banks, putting under management central bank can be quite nervous for the whole financial services sector. And that's why, exactly. Yeah. But this is why we, KCB, and working very closely with Diamond Trust Bank, came together to work with the central bank to enable the depositors to be able to get their own deposit and funds, working very directly as an agent of the Kenya Deposit Insurance Corporation. So to give confidence, to be able to say, look, ultimately, we are sure and confident about the future of the financial services because it's in Africa actually, if you look at the whole continent, Kenya financial system and sector is perhaps the second most sophisticated after South Africa.
Yes.
So there must be some ways for us to bring our own board solutions. And that's what we did in that kind of structure. Now we see strength. We see a lot of partnership with the new governor of the central bank, Dr. Patrick.
There was a pretty big change, a regime change at the central bank. Will you describe to us, you've dealt closely with the new governor. I've been reading what he says. It's really impressive. What's your sense?
Well, I would say, Dr. Patrick and Njoroge is, many people always say, wow, he's new and all these aspects. I would say that he's very focused about the outcome he's looking for. So in terms of discipline, in terms of looking at ethical running of the sector, he's perhaps the best governor we could have gotten in this moment for our country.
Wow. And you have a strong relationship with him? Obviously, yes.
We work very closely, and also because I sit right now as the chairman of the Kenya Bankers, my view is that we need to look for the industry beyond the current challenges.
Yes.
So he's a strong contributor to the economy, around about 9 to 10% as a sector, growing very strongly at double digits on an annual basis. And also, we're in the nexus of transformation of economic activities and empowerment and transformation for our nation. So if this is happening, Alikan, I think we're going to shift the landscape for our economy. We did have challenges, of course.
Yes.
But let me say overall that last year, as an economy, we look at our own currency, we grew around about 5.6, 5.7, 5.8%. The final numbers will come out soon. But look at our own currency. There was nervousness about the shilling. We were one of the best performing currency across comparators.
It's just incredible. What informs you of that currency?
So for many years, we talk about our economy being resilient, the shilling being resilient, not being overexposed to either one particular sector, one kind of natural resources. And therefore, because I think the economy has been quite well diversified.
Yes.
We don't find ourselves depending, let's say, 50% of our economy on one particular aspect. And also we must say that there's been very prudent management on the macro level and also within the central bank being able to oversee. And so the response we saw in the last quarter of last year, although kind of peaked our interest rates, increased cost of credit, was a temporary transition towards strengthening the macroeconomic aspect of our economy and obviously overall being able to stabilize the exchange rates and we see inflation. So we may not be used with the temporary shift, but we're in a really, this is a live environment of the economy we work with. It's not always going to be stable. There's going to be some turbulence, but it was very systemic, short-term turbulence, and we see the rates come down to where they are today.
Very well put. Now, just talking about the environment, you know, you're in East Africa, and obviously we had the situation in South Sudan, and I was listening to you in your presentation when you made the results, and you were very optimistic about South Sudan and a path back to stability. And when I looked at the numbers, it also was pretty impressive. You gained market share and profitability in that region. And Burundi as well, where the chairman said, you know, off a low base, but look at the up 200% or something. So tell me, Joshua, a lot of these companies have been reporting and found South Sudan very difficult to operate in, right? There have been some quite big hits that have come out of there. And if you went to somebody and said, Burundi, I grew my business 200%, people would say, how did Joshua do that? So what exactly would you characterize what's happened in the region, and why is someone like yourself at KCB able to pilot through this where others are struggling?
So we take a very different view in the way we go into our businesses. We tend to connect with the different sectors of the economy that we operate in. So let me give you, and these two countries are very different, Alikan. Yes. Sometimes it's very easy for someone looking at Nairobi and saying, well, Burundi should be this, South Sudan should be this. We work in the country, we operate, we have staff, we have businesses in the country. Now Burundi, the challenges for us we see is despite the difficulties, our customers are experiencing more growth in the last quarter of last year. So it's a different experience, because customers did leave into Uganda, they did leave into Tanzania, and most of those customers are now going back. Yeah. If you look at our business, we haven't stopped a single day, our business operation in Burundi.
Yes.
Correct? We have got 6 branches, there's 5 branches last year, going to 6 this year, and that has gone extremely strong for our businesses. What I see is the conviction of individuals in the country of Burundi to be able to get tomorrow and build a better business. So that's, for me, I would say, it's not a bigger size, but growing by 200% last year was quite a pleasant surprise in Burundi. South Sudan is maybe more different. We grew much faster, build up market share, grew our market share to more or less 60%. Yes. But I would say the difficulties we see is that the devaluation was one of the areas that we have always been anticipating a devaluation of the currency. In fact, we have been proponents of freeing the exchange rate.
Oh,
because
really?
You can, yeah, absolutely.
Yes.
Because ultimately, you're going to leave free market determine where the exchange rate can be. Because the fixed rate was not realistic in the market. And we've seen oil production drop, economic activity. But 2 things have happened in that country. We've seen non-oil revenues grow up significantly to almost 25%.
What period is that happening?
So in the last 2 years, we've seen a lot of focus. We've been collecting as a bank to be able to enable government to collect non-oil revenues, introduce some taxation they never had before. So those are areas, in my view, that are being revisited. And they're very rudimentary, actually. In my view, if that business is that area is being built on, you can increase the size.
Yes.
Now, the future looks optimistic because we do believe that South Sudan is a tiger that's gonna get up. Today, the activities are the bare minimum. So whether it is infrastructure, energy, there is no sector you can look at today, agriculture, tourism. And we've been following very closely the peace process. Yes. And we are confident when that is resolved, Alikan, you'll find businesses getting back. So businesses which have come out of South Sudan have had this difficulty because they are a short-term view. So we are going in here. And let me be honest that these different businesses, they are businesses that have stayed firm. We see businesses from Egypt, businesses from...
in South Sudan?
Yes, from, not Eritrea, but businesses have come in from, especially the north of Africa, and the Middle East have continued to invest in South Sudan. What we have seen businesses from this part, and now they're parts, I'm very excited actually that they are parts of the ESC.
Yes, because that was a big move.
It's a big, bold move. I mean, the entire leadership of ESC could not admit South Sudan into our own community if there wasn't potential and the centricity of the connectivity we face. Yes. That's, for me, is the exciting part. So we see business will get back. It's actually quite normal. You see business, despite the currency devaluation and increases in the price of goods and services, I am quite bullish that with the peace process coming in, and I have spoken to the 2 principals myself.
Yes. You have you?
Yes. So,
and do you feel that they get it now, that they want?
They are very committed themselves in getting the process realized. It's not always easy to manage the political process, but as individuals, they are absolutely committed in getting the country forward. They see the loss for the last 25 to 30 months, and they're ready to take off. So this year, 2016, may start very low because of a huge impact on the exchange rate devaluation. But as we go into the 3rd quarter, 4th quarter, and 2017, we're going to be in a very exciting position in South Sudan.
Joshua, can I now go to the full year results? There was a lot of detail in there. I see that you grew total assets, I think, by 14%.
Correct.
The loan book grew 22%.
Correct.
Earnings per share was up very, very sharply.
Correct. 16%.
16%. Dividend you kept unchanged.
Correct.
You're paying some out in the scrip, but there was a
Correct.
lot of confusion around that.
Correct.
Do you want to just tell us what informed your decision to pay part cash, part scrip?
So we've always worked very closely, Ali Kanibe, in the last year with our shareholders,
Yes.
with a view of retaining more of the cash, because we see new opportunities. I have always been very focused and pushy that this market, if you look at what they call banking per capita, how many banks are available for each population, we were way above the curve. I mean, if you look at Africa and the world, Kenya is standing very top. So if you have 43 million Kenyans versus 43 banks, actually we were 45 banks, and 2 of them are now being closed.
Yes.
And that gives you the chance about what opportunities you can create in the market. We believe that we need to consolidate the industry today. And consolidation comes in many avenues. It can come in through increased supervision, and I'm extremely excited that the governor has taken this as one of his key priorities for 2016. Both looking at the bank's behavior, ethical businesses, and also getting out of indiscipline in the industry, because we are here to build a long-term business.
Yes.
That for me is creating ourselves an opportunity to be ready to take off an opportunity should it arise in the market.
So you're conserving your cash.
Exactly.
You see an opportunity in the consolidation.
Exactly. In our own market, which is the main market in Kenya today.
Yes.
We also see some areas in the region, but I'm excited about the opportunity we see in the Kenyan market.
Okay.
Yes. And that also addresses 2 issues, Alikan. It addresses the issues about the economies of scale.
Yes.
So if you're looking
You
for...
were saying bank, it's quite expensive because
Absolutely.
we don't have economies of scale.
Absolutely. I mean, today, we are spending a lot of time fighting and chasing for every single transaction. But how do we consolidate the services today and build economies? So if you have financial institutions with $1 billion, we're not there yet in capital.
Yes.
So today we have got $600 million or $700 million in capital. And what happens is, because the way we deploy our services and networks, you're going to monetize a particular cost for every infrastructure, for every ATM we deploy, for every credit assessment we do, for every resource we deploy. And I think that long term, to address the issue of cost of credit, we have to deal with consolidation as one potential solution for the industry.
Understood. So you're keeping your powder dry.
Exactly.
For that moment when you feel that comes.
Yes.
But then obviously we've also had some additional developments, haven't we, Joshua? We've had Barclays PLC looking to get out of Africa, pretty much announced it. Is that an opening for you as well, do you think?
It's difficult to understand, Alikan. It's maybe early days.
Yes.
Barclays Africa was a fantastic franchise. Has been, for if you look at there are very few organizations who have been here that long enough. One of them is Barclays and ourselves.
Yes.
And therefore, it's early days to know how it evolved, Alikan, in my view. I mean, normally you look at global environments very differently. But we will say there is something we are yet to understand fully why, because I think it's in terms of ROE, it's been a very strong business for Barclays. And so I won't be surprised that over the next few days we may get more clarifications. We will not ourselves be focused on Barclays as KCB.
Yes.
Our niche is more different. We are seeing a lot of medium-tier businesses, banks, because we have that network.
Yes.
We deploy those customers. In other markets, maybe we'll have a different interest. So if you're looking at other markets where we are not present today, we're looking at Mozambique, for instance.
Is there an opportunity to do a bolt-on acquisition?
In those areas, in those countries, we prefer an acquisition in terms of expansion. So we set up a rep office, if you saw, in Ethiopia last year. So we've got, countries we're looking at very strongly today is actually the DRC and Mozambique. That was our plan for the last 3 years, and we continue to push. And if I summarize, I am still confident that Africa positions itself as a key market for financial services in terms of catalyzing growth for the economies. So it's a different messaging as well for investors to worry that there is a big concern by one of the largest banks in the continent. And that's a conversation, Alikan, that I think is not I don't think the card is out of the bag yet.
No.
I think the next few days or the next few weeks, you may see more clarification.
But I just thought it was less about the African opportunity and more about Barclays PLC itself, looking at its own capital structure and wanting to consolidate back into Europe and the US. That was my impression.
It could be true.
Yeah.
I mean, our view is to speak much more about the market where we run businesses, the opportunities we see, and the chance to really exploit and use that platform to extend financial services, to plug in a lot of our own populations. into financial empowerment using the financial services sector. And that's something you can see now.
Yes.
In terms of innovation, it's already number one today.
Yes.
If you pick up our own KCB M-Pesa platform, which we launched last
Why don't
year.
we talk about that? Because you've really, when I looked at those numbers, it was mind-boggling. The number of loans that you'd done on the mobile the year before compared to now, the growth. I think a $92 million loan book now in the mobile platform. You said this is the age of algorithmic banking, the Uberization of. I love those phrases, and I want to use them. But so describe to me that, because that seems to be very sexy, very new. You've embraced it. It's taken you up to 10 million customers. Tell us what's going on.
In no way, I would say, no country in the world has had the amount of transformation on the financial services like Kenya. We are standing today globally, in terms of being able to reimagine what could be. So if you think about, and I see personally that 90 to 100% of our transactions are getting digital in the next 2 to 3 years.
Yes.
And when we talk about algorithm banking, that's what really it means. So the big data analysis today, so the financial services like ourselves, we see ourselves converting ourselves into fintechs.
Yes.
Using the data, to create algorithms, which then can predictively analyze how banks lend. Traditionally we used to do 200,000 loans.
Yes.
Last year we did 4 million loans, of which 95% were digitally delivered.
See, that's mind-boggling, isn't it?
See?
And is it totally scalable, Joshua? I mean, is there a cap on growth in this area?
I don't think there is. We are probably in the first half of the digital divide.
Yes.
We haven't yet, in my view, scratched the surface, because if you look at the amount of money being transacted on that channel, the loan per capita is around about $25, $30.
Yes.
We have a chance to scale it.
Yes.
Our view is to increase it to $100
Per
capita, loan
yes,
per capita.
yes.
Then you start seeing the real numbers. So you can imagine that although the industry today, if you think about $25 billion in terms of size of loan book in the entire industry, we're saying that the digital side will deliver 25%. That's $5 billion.
Wow. So that's the fastest growing trajectory.
Yeah. And then, partly delivers revenue, but more critical, delivers a cost opportunity for the lenders. Because, you're getting your loan today on a second basis.
Yes.
Literally, it used to take you days, but now you are pre-approved and you get your loan dispersed within roughly in 60 seconds, you're done. And it's any time of day, any time of night.
And what I was amazed with, you said it was a 98.5% repayment. Is that your big data capacity, or how would you describe your ability to manage it?
It's a great insight.
Yes.
Absolutely great insight. But a lot of the time goes into the teams and the analysts that create the algorithm. It's a very dynamic tool.
Yes.
I mean, we sometimes deal with 20, 25 different indicators in the algorithm. And depending on how much weights that you create and you link them in, that then determines how good your scorecard is. Everything now is there's a lot of intelligence that goes into building those kind of matrices. And I must really think that for us, because I'm a big proponent of catalytic partnership in this, so working with KCB and working with Safaricom, particularly M-Pesa team, has been a big opener for us. What we find also is that perhaps it can deepen the access of finances by people who are totally excluded.
That's right.
The fact that today you don't have information or security doesn't mean that you're a bad payer. It doesn't mean so.
No.
When I see someone who runs a kiosk, is running a small shop, is running a transport business, is selling milk in the morning, I need my 500 shillings, 1,000 shillings, 10,000 shillings, I can pay it at the end of the day. That's before we had no visibility.
Yes.
And so you're right, when I talk about Uberization.
So you're igniting
exactly
the grassroots.
This is what I see. And so we're targeting ourselves now to use that basis to extend the level of services and information. It's going to be the most exciting part. I think this is historic in our view on how we see the business running. Never before have I ever seen someone say, look, I was out there in the field, I was traveling, I didn't have my 1,000 shillings fare, and pap, KCB M-Pesa delivered it for me. And I'm done, and I'm paying it in the evening. And that changes. It's also about dignifying. You don't have to ask Ali, can give me my 1,000.
No.
I get it, I'm pre-scored, I'll pay it, and I move on, and I do my business.
Now, also...
And then we can extend it across the continent. Think about that opportunity.
Let me ask you about that, because you were talking about leveraging particularly this digital lending into Ethiopia. You opened your representative office last year. 80 plus million market, everybody's very excited about it, but there was a general sense that the Ethiopian government was going to be slow to open up the banking sector. you seem to have found yourself a little calling card here, a proof of concept.
Well, let me say, Alikan, that it's exciting for us. We have a different view how we see the market. There's a lot of push to make the changes much faster. And I think it will take the right time to be in that market. The view that we have from the National Bank of Ethiopia and from the country in general is that you need to be present and understand how the economy is working. Yes. And the best choice is set up a rep office. Then you can understand exactly how business is transacted. So we can do some little. We don't have a banking license, yes, but you can then be able to connect our own regional customers to the customers in Ethiopia, for instance. So, and then technology becomes a big area. In fact, I think the biggest area of opportunity for us is using our digital tools and yes, mobile investment today in terms of lending to deliver services.
Can you imagine if you can deliver that into that economy? What's going to happen?
So this for me, so it could not be, so sometimes we are using the old scorecard, yes, they're going to go in, deploy branches. That may not be how the script will be unwritten, yes, or written in a market like Ethiopia. So we leave it in there without saying too much.
Yeah,
but it's an exciting space.
No, I can imagine.
In Ethiopia.
You also said that you go up there regularly to have a look around.
Exactly. It's an exciting market, though. And next time, perhaps when I'm down in sometime in April, we'll get a chance to go with you.
I'd love to do that, actually. Right. I haven't been there for a few years. Let me talk about the geographical story. You were also talking, in your target site, we've had DR Congo for a little bit.
Correct.
We've had Mozambique.
Correct.
Tell us what's going on there.
So those markets remain a focus for us. Obviously, Ethiopia was going to be one of the ones we focused on last year. So the other one's on track. I mean, we're giving ourselves the next 2 to 3 years. Yes. And it's just looking at how do we connect all our customers and clients across that platform, Alikan. And that's, for me, is the exciting part. So if you think, the DRC is very close to us in the region.
Yes.
If you're looking at,
but you've already got branches in Rwanda, exactly, which are very busy and they're banking the DRC in a way, yes?
Exactly.
Yeah.
Exactly.
So you're excited by that?
Very, very excited, Alikan.
Still looking at Somalia?
Yes, Somalia, it's something that would be slightly lower. I mean, we've been very ready to be able to open businesses, but our goal is to continue to strengthen the market in terms of regulation. How do you run a financial services that still meets the global standards? And perhaps our Sahel banking, which has been our Islamic banking arm, may be one area we may want to use to catapult ourselves in that market in 2017.
Is that product ready for the market? Is it deployed in the market, or would you say you're still, because I remember there's still some regulation, isn't there, that's required?
Yes, correct.
Is that all ready for you?
So work in progress right now. I wouldn't say we're done yet, but I think it's work in progress. And perhaps in the next year, this year, is about connecting the dots going forward in the market like in Somalia. Yes. And because we're already running very strongly our Sharia compliant product, it may be one way to be able to progressively enter that market. But it will come slightly later, in my view, than what we see in the two markets, which is the DR Congo and in Mozambique.
And Joshua, I remember when I used to look through the accounts in 2010. Just tell me what 2010 cost-to-income ratio was.
2010 cost-to-income ratio was around about 64%, 64 to 65%.
You brought that down to 50.1, I think, in the last time.
Exactly.
I mean, I remember us talking, and your grip on the basis points of the business. I don't think any of your management have seen anything like it. So just tell us, we've had some big trend improvements in the KCB story. That's a clear example of that. Where else would you say you're most proud of in terms of what's been achieved at that sort of financial level?
Yes. I mean, I would say, Alikan, 3 main areas. Obviously, the business, the buzz around the organization has been very strong in terms of our brand and our engagement.
The brand has been very strong.
And although naturally on the side of technology, the innovation of products, using our digital channels, our mobile investment, that has been very, very good for us. The KCB M-Pesa has been a big partnership with Safaricom. That, I think, for us, has to have the most strategic push in the business that we've run ourselves. So that has also helped us manage our cost drive. So basically, as we continue pushing down our costs, by using technology, we've been able to monetize those transactions across the entire organizations and therefore build a platform for a strong business. We're also going into a major investment of our core banking system this year, so targeting 30 million customers.
Building the capacity.
Exactly. So that gives you a good chance in terms of where we see our businesses progressing.
That's a big increase.
Exactly. So I would say that area. And also, we have a great team. We have a team that has been able to really look at strength. Our international businesses
Yes,
were
talk to me about that,
contributing
yeah.
6%.
Which was a first time we had a
Correct.
reduction there for quite a while, wasn't
Exactly,
it?
exactly.
Was that a currency thing?
Yes,
Yeah.
purely a currency thing.
Because the shilling was
Yes.
very strong, everything else was...
Absolutely.
Yeah.
That has been very well for ourselves. So if you look at the South Sudan devaluations,
Yes.
actually without that, we are going to contribute to international business, we're going to be 16%.
Wow.
So
Okay.
very close to our 20% target we have
Yes.
internally. Correct.
So,
Correct.
so really it was more a currency play. And then if you look
Yes,
at that,
yes.
South Sudan is obviously
Yes.
the biggest piece
Yes, correct.
of the international businesses.
Yes, today it's at 6%.
6%. Second is
Rwanda today,
Rwanda.
yeah, at 3%.
Yes.
Tanzania at 3%.
And Uganda, not so much.
Not very good, but this year we expect to do much better in Uganda.
Yes.
Absolutely.
And
Absolutely.
what's
Correct.
driving the growth in these markets? Rwanda,
yes.
of course, is not one of the biggest EAC countries, but is it because it's progressive in terms of, you're in every district, I think, in Rwanda
Exactly.
as
I mean, I think it's our approach, Alikan. So I would say two things on that. If you look at the region internally, for us, Rwanda has been a big push on technology.
Yes.
So if you look at the deployment, so in Rwanda and Tanzania, we're very much present in a lot of areas in the country.
Yeah.
But what has worked well in Rwanda is the push and the bias, positive bias
Yes.
around the technology.
Yes.
So that has brought in many people within the economic area of our business that we engage. That has been very catalytic for us. South Sudan, we had an early move advantage for ourselves.
Yes.
Uganda, a little bit more difficult, I would say, because of
but
the
you also
nature.
had to run up to the election.
Exactly, exactly. Like last year was very difficult for us in Uganda specifically because of the elections. I just came out of there on Friday.
You were in
Yes,
Entebbe.
and you can always say that the difficulties was everyone was very much in a limbo
Yes.
for the elections.
Yes.
So for a year, people were waiting. Now everything is up, Alican, so we can run business.
Joshua,
Yes.
what else would you like to add?
No, pretty excited to say from where we sit as an industry and for KCB, I think it's been exciting. When I
Yes.
look at the market excited, the market reacted very
Up
positive.
nearly 6%
From where we are.
And I did say that
Yes,
beforehand.
yes.
I said the results will come
Correct.
and then it'll
So
react.
we're very excited about what we
Yes.
see as a business, whether here. And I think what we like to see much more is consolidating our business, not just in Kenya, but
Yes.
using the region as a platform to push our business to the next frontier of our growth. That for me is the exciting part. And I'm excited to see the buzz and the energy in the market. And that for us is what will expel and propel our businesses going forward into a stronger unit and home for a financial services group like ourselves within the region.
You've done extremely well, Joshua.
Thank
We're
you.
really proud. And
Thank you very
I
much.
was listening to those results and I
Yes.
thought, my word, what in a short space of time
Yes.
you've driven this organization a
Thank you.
great distance.
Thank you.
And I know you keep saying that it's not a sprint, but I can see. Oh, and by the way, congratulations!
Yes, yes.
I heard you went running this weekend.
Yes, I was running this
And how
weekend.
many kilometers
At
did you?
21 kilometers, Alican.
My God.
Yeah, in below 2.5 hours.
These are your genes,
Yes.
Joshua. Congratulations.
Thank you very much,
Joshua.
Alican. Thank you.
We're really impressed.
Thank you.
Let me ask you one final question. Look, you've got these big ambitions.
Yes.
Capital. You were telling me that you've taken a more progressive attitude to the way you're counting your capital.
Correct.
Right. So because there were a few questions came up. Do you remember Joshua saying that are you short of capital? Because in one of the reports,
Yes.
the way you'd recalculated some loans made it look as if your capital was lower.
Correct.
So if you want to care to answer that, and then the final question is, I can imagine you're putting your hand up and people are saying, Joshua, how much do you want? Is this the truth?
Let me say, Alican, from where we see, and just to explain the issues around our total capital ratio to risk-weighted assets, largely we came down, 200 basis points.
Yes.
But we went into a very aggressive assessment last year
Yes.
with complying with Basel II to set up what we call an internal capital adequacy assessment process. Now, ICAP, in short, kind of looks at all the risks that you're facing in a bank and how much capital that you're allocating.
Yes.
And in that basis, you then put some targets and say, this is how we can compare an institution which is listed in Europe, listed in the US, listed in the Middle East, and in Africa. The only country which is doing that right now is South Africa. But I know that the central bank is ready to be pushing Kenya as a market to
Yes.
move into this kind of platform.
So you were ahead of the curve.
So we already ahead of the curve last year. We finalized our own ICAP document, which we finalized with the central bank. And what it does reclassify our long-term foreign currency loans. So
Yes.
we have foreign 7-year loans from the international finance corporations, and we reclassify that loan into a senior debt. So what that means is that we are now correctly positioning and classifying that loan than it was before.
Yes.
Now, we are the first institutions to do that in the market. So whereas we had classified it differently in 2014, that has changed. And that's what you see, that dip. So it's not because we hadn't prepared ourselves as an organization. And I think a lot of financial institutions are not yet doing that classification.
Yes.
So this process in 2016, 2017, we'll see the whole industry. So that Alican, when you're looking at the capital adequacy of all banks, you use ICAP as a basis to compare across the industry. Today, everyone is treating their own capital allocations very differently.
Yes.
So that's, for me, is the one issue I wanted to be able to allocate. But we don't have an issue today raising capital. We have a lot of proposals that are coming into our hands from the Middle East. We've had many proposals coming from the Eurozone area, from the United States. There are many because of the nature of the organization, and especially once we listed our credit rating, international rating,
congratulations,
from S&P and Moody's.
And that's at the same level, it's at the highest level because it's the same as a sovereign. Yeah.
So today there's a lot of interest. In fact, the question for us is to decide what amount of capital do we need. But we are more biased into raising tier 2 capital, which is much more 7-year money. It also enables us to extend our credit facilities across a longer period of time. That is the exciting part. So if you look at comparable markets in West Africa and South Africa, I think Kenya reflects that KCB is standing on the very front in terms of being able to do resource mobilization. So we will raise some capital much more biased on tier 2. That then will refinance the reclassification which we did in our financial statements for 2015. So it wasn't really an exception. It was actually trying to be ahead of the market and still demonstrate that we still have the muscle. We still have 100 basis points buffer for this year to be able to run our business. And I think it's the right thing for a leader. We want to be outliers in designing and adopting new standards. Ali, can I give you some background to this? A few years ago, when the Central Bank was moving into, we were still on Basel I, we had taken a voluntary approach to comply on Basel II guidelines 5 years in advance before 2013. And that is the nature of a Catholic organization that we run as KCB.
Yes.
We are not going to stop from applying new standards globally just because they're not ready applied in our market. And you can see from the international credit rating is one aspect. Our ICAP policies are new items we put in. And so we are saying you can sit somewhere else globally and compare KCB as any other comparable organization to invest across the globe. So we are among the top 100 banks today classified. The investors look at every single day and say, when you look at East Africa, this is who we are looking at. Yeah, when you're looking at West Africa, there are the. So today we remain the only financial institutions today that is listed that has done a credit rating that is international by 2 rating agencies. And I think that for us is a very big plus. So if for anyone looking at the organizations, you have a comparable view with an independent person to say, I don't know what other organizations are waiting for. But I would think that for us, we need to be an outlier to push the use of the credit rating. You never know the ability for us to raise funds internationally. And that, for me, is the exciting part.
Yes.
Now, if you look at what we do, we don't lack, we believe that our business should be running with a capital base of $1 billion. So if you see our current planning basis, we want that our single borrower's limit or single lender's limit is $250 million. Then you can easily take up a project and say, I want to be a big driver of the pipeline, where the KPC wants to do a pipeline from Mombasa to Nairobi, will come in and say, we'll be in a position to finance you for this kind of project. When Kenya Power wants to do a $300 million project, we can easily be able to stand with you on this project and do it. That will change dramatically the way the economy progresses in terms of development and change. That, for me, is the excitement I see as a CEO of this organization.
Joshua,
so the exciting, I will also say that for me, if you think about where we bet the future, digitization of financial services is a real enabler of transformation. And so I talked a little bit earlier about algorithm. It's actually already with us. No, a lot of people may not have it. But you'll be amazed, Alican, how much information in the big data you can analyze.
That's right.
That can determine how you run your services. And it's going to go beyond, not just us alone. You see it done in music, correct? Today I can tell you the kind of music you like to listen to. I've got some kind of app. It can tell you about what you like to visit. I can be able to use your Google to decide those kind of destinations. Banking is not any different. And I think being in the forefront as an outlier, as an investor, adopting this technology, I think changes the way we will relate to our customers, especially the millennials. Those that today, 10 million customers don't always come to a branch. So our next race is to build a bank for 30 million customers. That's really, if you ask about what's a big bet for our businesses. And most of those, more than 70%, will be in digital channels.
Joshua, it's a pleasure speaking to you today.
Thank you very
and
much.
From my own perspective, you are an outlier, and you've made the bank an outlier.
Thank you very much.
And that really is a statement of a compliment.
Always great seeing you, Alikan, and hosting
Pleasure.
you. I appreciate it.
Thank
you
you
for coming.
Thank you.
Thank you, my brother.
No, I appreciate it.
Appreciate it.